being in real estate since 2004, I've seen situations where families lost their homes because they transferred title over to one of their children, thinking they were going to avoid the probate process that way. I've seen estate sales because people don't have the proper paperwork in place. I've seen people pass away and not have any mortgage protection in place. So one of the reasons why I actually started doing financial services and educating families of finance and mortgage protection was because I wanted to help all the clients that I had in real estate protect their homes. So with mortgage protection, in case you get severely ill, disabled, you lose your income, you can replace your income to continue paying the mortgage during those tough times. Or if the breadwinner happens to pass away, which I actually had one of my clients pass away, and they didn't have any life insurance, any savings, any retirement, and they weren't able to keep up with the mortgage payments because one of the breadwinners passed away and they lost that income. So having that mortgage protection in place replaces that income, even though it's not going to replace your loved one, but it replaces the income so the family can still stay in the home. And then we can also set you up with an attorney, and that's a free consultation where we can get your trust set up, and that trust makes sure that the transfer of ownership of your home goes to the beneficiaries that you choose, whether that's your children, whether that's your siblings, whether that's a charity of your choice. But that trust paperwork, what it does is it helps that transfer of ownership a lot easier and avoids the probate process, avoids a lengthy court process that is quite expensive. So at the end of the day, it's just protecting your hard-earned money and your hard-earned home that you built for you and your family by having a mortgage protection in place, by having a trust in place, by meeting with specialists like our GFI team that will be here on July 19th at our grand opening to answer all those questions to make sure that your home is properly protected. Because you work so hard, let's make sure that it stays in your family. So the three common mistakes families make when choosing mortgage protection. One is thinking that the mortgage insurance that your lender attached to your mortgage payment covers you. Unfortunately, it does not. It covers the bank. So in case you were to not pay it or foreclose, that's what actually pays the bank. So the mortgage protection that you need is a benefit that goes to you and your family. So you get to pay off the home and your family gets to stay in the home. The second most common mistake is thinking that your employer insurance or your insurance that's through your job is actually enough to cover your home. In most cases, I've seen that people only have like 10 to 20,000 for work insurance for the life insurance portion. Sometimes they'll give you 1 year annual income, but usually that's not enough to cover your mortgage. So that's a common mistake that I see, is thinking that your employer's life insurance is enough to cover your home. And the third most common mistake that I see is people saying, well, I can't afford it right now, I'm gonna wait. Or I'm not as healthy right now, I'm gonna wait. The older you get, the more expensive it gets. And we don't know how your health is gonna change between now and then, because that also affects your premiums. But at the end of the day, let's see what we can fit within your budget. Because even if you can't protect the whole mortgage, as long as you can bridge the gap, then at least there's something there to protect your family. So join us on July 19th for our grand opening. Our team of specialists will be here to answer those questions and make sure you do have the right mortgage protection in place.